Hi everyone, I'm Karolina. I'm a product marketing manager for business travel here at Payhawk.
And I'm Boris, product manager for the business travel at Payhawk.
Last time we made what I think is a fairly bold case, which is that finance should own business travel. Not HR, not ops, not a travel manager on their own, but finance should be included as well, the team that owns every other spend category in the company. And today we'd like to push that further because if you take that case at face value, the next question becomes obvious. Doesn't every travel tool already claim that they do it? There's loads of things on the market already. So why do we think that it still needs fixing in 2026? So let's get into it. So Bobby, again, loads of tools on the market at the moment, specialized SaaS solutions for business travel, traditional agencies, they would all tell a CFO that this problem is fixed, right? They say they bring visibility, control, savings to the finance team. We're saying that's not quite true. Why is that?
Yeah, great question. First of all, Travel Navan, the agencies, I think they build good products. Companies get genuine value out of them. I think most probably visibility and control is better than it was 5 years ago for those companies, with people booking whatever they want. So the story, I think, is not totally wrong. I think it's just not complete. The main difference when you look at how we think about business travel is where we started. They started with the traveler, we started with the CFO. And I think most travel tools out there were built for travelers and travel manager first, and then finance came later. And you can see it in the architecture. Booking is the front door, policy gets applied at checkout, kind of as a final check before booking goes through. And the whole reconciliation is downstream. You book here, you pay over there, you reconcile somewhere else. What this means in practice is finance is always at the end of the change. You can add a finance dashboard on top of it. You can add reporting. You can add single sign-on, but the underlying flow is still booking first. And I think we started in the opposite place. I've been building the spend management product for the past 5 years. And the question I asked was, what would travel look like if it was just another spend category that finance already controls, like cards, like expenses, like accounts payable, and we built it from there.
Yeah, I totally see that. I think that's the core point, isn't it? It's the difference between building something from scratch in a certain way and adding something as a bolt-on. You can build a finance dashboard onto a booking tool, but if the underlying flow that you mentioned, if finance is lost in that flow, they'll just end up having to clean things up at the end of the month still. Well, let's get specific about what this actually looks like as solutions go. Your typical managed travel finance toolset is some sort of a booking tool, an expense system, corporate cards, maybe an agency. Each of these tools, they do a job, right? Why is there some of them not quite sufficient for finance?
Yeah, again, the problem isn't with the tools themselves, right? I mean, each of those does its job well in isolation. The problem is the gaps between them. Think about what a single trip actually looks like, for example, in that stack. The travel management company would usually book the flight.
Mm.
The corporate card pays for it. Sometimes you pay through a bank transfer. The booking platform gives the employee a nice user interface. The expense system then captures the hotel receipts and the taxes. And then someone, usually finance, has to thread a needle through all of those tools to figure out what was the trip, who took it, do the reporting against which budget, and what did it actually cost end to end. I think that stitching is the work. It's sort of the invisible work that you have to do, and no tool in that stack solves it end to end because the gaps are not anyone's responsibility. So the
Mm.
travel management does travel management things, the expense tool does expense things. Nobody owns the connective tissue between them, and this is where we started. This is what we built, and I think Payhawk Travel, it's much more than just a travel agent. It isn't just a better travel agency company or a better expense tool. It's the connective tissue between those tools and those problems rather, and it's built into the system finance already uses for everything else.
I think that makes perfect sense. So say if you heard a CFO kind of pushing back saying, we already have corporate cards, we have an expense tool, we have control over travel spend. What do you think they're missing in that argument?
Yeah, I think I also get that a lot. I think it comes from really reasonable place, a historical place. I think cards plus expense is generally better than nothing. You can categorize spend after the fact. You can pull reports. You can see what was spent. But here's the thing. I mean, that's all retroactive control. You see the spend after it has happened. You might set some, card limits, and you can analyze it, you can report it in, you can categorize it. But what you cannot do is fully build it into your workflow. The second thing I would say is, which is more important, cards see transactions. They don't see the full context. If your corporate card sees Lufthansa 450 euros, it doesn't know that your flight to Madrid for the sales kickoff, approved by the VP of Sales against the Q1 events budget, on a trip that was also included a hotel and 3 taxis, it just sees a line. And the expense system sees the receipt, which are scattered, no approval flow, not the policy check, not the budget. They're not in a single report, or somebody manually has to mark which the report they're part of, and you're just passing that burden. So finance has to assemble all of that context manually after the fact, or put some of that burden to the employee. And I think this is the gap, right? Cards plus expenses gives you spend visibility. It doesn't give you full spend control, and it doesn't give you the spend context and the reporting after that. So those are, I would say, 2 very different things.
Yeah, definitely. I think the sort of point that we're coming to is around, one, stitching those different tools together into one, and 2, making sure the finance is included kind of earlier on rather than downstream from that. So let's translate that into product. What does finance first actually mean inside Payhawk? If a CFO were to open the product, what would they see in Payhawk Travel that they wouldn't see in a typical, business travel SaaS solution?
Yeah, a few things, but the most important one is what we call trip-based reconciliation. Every trip in Payhawk is a single object: the request, the approval, the booking, the card it was paid on, the invoices, the expenses incurred during the trip, the budget it was charged to. All of that lives together on a single trip in Payhawk. And a finance person opens it and sees the entire story in one place. So if you compare that to a typical setup, the trip is a row in a TMC report, the payment is a line on a card statement, you have to pull from somewhere, the hotel receipt is in the expense tool, or it gets sent over from the travel agency, the approval was in an email or Slack, somebody's inbox. You probably don't even care about the budget category because it got assigned by someone in accounting 2 weeks later. In order to fully reconstruct the trip, you have to go to 4 or 5 different systems and just stitch it together. The second thing is approval. In Payhawk, approval happens at the request stage before the booking. You can obviously set up an automatic approval based on the policy. If approvals, let's say above certain amounts, are important for you, the manager can approve the request. Not did we actually spend 2,000 euros on the trip 3 weeks later after the fact. The approval is meaningful in that way because it happens when there's still a decision to be made. And then obviously auto invoicing, I would say, is the last piece here. Mm-hmm. Every flight booking gets the invoice attached automatically. No one is chasing around for PDFs, invoices, and no one is filing reimbursements. The trip just closes itself automatically.
I really love that phrase that you used. The approval is meaningful because it happens when there's still a decision to be made. It seems like so much of what makes finance work look broken is approvals that happen after the fact. when the decision has already been made, when the money has left the business. So it seems like quite a lot of pain chasing people or absorbing the cost once the transaction has already been made. Let's talk about ROI. Most travel ROI conversations start with cheaper fares. You might have negotiated rates, supplier discounts, that kind of thing. Why is that the wrong place to look?
I think the answer is just maths. I mean, it's usually the smallest line item. Fare savings on negotiated rates are 1 to 3% of the total transaction. That's real money, totally. I mean, I'm not saying it's not, but it's the smallest part of the equation. The bigger savings lives essentially in two places that nobody talks about. The first one is leakage, which usually comes out of policy bookings, employee booking outside of the system on personal cards, last minute fares that get approved because there's no time to check. That typically 5 to 10% of the total spend. Sometimes it's more and it's invisible until it's close. The second one is time. Finance team, which is spent on reconciling trips, traveler time spent navigating the booking process, submitting expense reports afterwards, or the manager. You might not have any out of policy bookings, but then you'll probably have each manager spending time reviewing approvals without the proper context. That doesn't show up on the travel budget, but it's real cost. And it's much bigger than fare savings everyone optimizes for. So when people focus on negotiated rates, they're optimizing for the smallest, most visible thing. With Payhawk Travel, you can import your negotiated rates with, let's say, if you have a negotiated rate with the hotel. But again, you shouldn't ignore the two bigger things sitting next to it. It's a bit like polishing the windows on a house with the leaky roof.
I think that's exactly right. So on those savings, the kind of different type of savings beyond cheaper fares, we say that if you use Payhawk Travel, you might be able to save roughly 90 minutes per trip. Let's break it down. Let's make it make sense. Where does that time actually comes from across the trip lifecycle?
Yeah, first of all, obviously, I want to be fully transparent. The 90 minutes is a directional estimate. It varies by company, by how much process they had before, but the breakdown is roughly 20 to 30 minutes for finance, 50 to 70 minutes for the traveler, and you can use our ROI calculator to fully estimate that and how much that is for you based on your specific process. But for finance, the time is in three places: chasing invoices that didn't come through automatically, matching card transactions to trips so you know what each line is for, and processing expense reports, reviewing them, approving them, just querying them when something looks off. That's around the 20 to 30 minutes. Multiply that by the number of trips your company takes per month, and it adds up very fast. So for the second one, I would say is the traveler. The time is more spread out, looking up the policy to check what they're allowed to book, comparing options across booking websites, or getting a few options from the travel manager, waiting for them to reply, getting the approval from their manager, the back and forth, the chasing, the have you seen my email yet? All of that compounds into time, pulling the receipts all together, categorizing them, resubmitting when somebody gets queried. All of that compiles. And then I'll say overall, the 90 minutes is that combined number. And the point isn't really the exact figure. It's basically all process time. None of it is a decision time. None of it is a judgment. It's all chasing and stitching that should never have been a person's job to begin with.
Yeah, and I think for me, that's the bit that lands best when I talk to people about this. The time you save is really on that grunt work that you don't want to be doing. It just seems like a waste of time. We're taking that time away from work that doesn't need to exist in the first place. Let's talk about how this kind of single tool, Finance First setup, how that shows up when it comes to audits. So when auditors come asking about travel spend, who approved it, why, which policy it looked at. What does that look like for the finance teams without a system like this? So thinking back to those finance teams that maybe use multiple tools, having to hop between them, and what changes with the single tool where you have all that data and kind of in one concept of a trip that you mentioned?
Yeah, I think without a system, an audit on a travel spend is a big project. It's not a question you can answer in 5 minutes. The auditor asks, show me the approval trail for these 10 trips. Finance does the archaeology. They go to the email archive. They go to the Slack history. They go to the booking tool, the card statement, the expense system. They try to match everything up. And then they write a memo explaining why what they found doesn't quite line up, because something always doesn't. And what I've seen, finance teams budget literal weeks for that kind of audit prep. And the issue isn't that they did anything wrong, is that the trail doesn't exist in one place. So they have to reconstruct it. What I also mentioned earlier, with Payhawk, that trail is the trip itself. The auditor asks, show me the approval trail for these 10 trips. Finance opens the trips app, and there it is. Who requested it, when, who approved it, when, against which policy, with which card. The invoices are already there, attached. The expenses are already grouped, synced to the ERP with the right cost center, which was automatically assigned an expense, which is the real big difference. And the audit goes from being a project to being a simple question. And that changes what finance can spend its time on.
Let's go back briefly to the point that you made earlier around what people tend to focus on when it comes to savings and cost optimization. I'm particularly interested in the control angle. So what would you say the difference is between cheaper travel and travel that is better controlled? And why does it matter? Probably most to the CFO more than anyone else in the company.
Yeah, I think both of them matter. Cheaper travel is just one dimensional. You're optimizing for a fare, maybe by 1 to 3% again. It's measurable, it's visible, and honestly, it's where most travel pitches live because it's the easiest thing to put on a slide. Better controlled travel is much more structural. You're optimizing for the whole thing: leakage, audit risk, finance time, traveler time, policy compliance, predictability of the spend. And the savings are in the 10 to 20% range, sometimes higher, depending on where you start. The reason that matters to a CFO specifically is that CFOs are not in the business of optimizing single line items. They're in the business of running a predictable, auditable, controllable finance function. And a 1% fare saving doesn't help with that. It doesn't change your whole process, right? A travel category that's actually under control, where the spend is approved before it happens, whether it's reconciled automatically and visible in real time. That's a structural change to how the finance team functions. So when a vendor leads with, we're actually going to save on fares, the CFO is hearing we'll make one number on your travel report slightly smaller. And when a vendor leads with, we bring travel under financial control, what the CFO is hearing is we'll fix something structural about how my team operates. And I think there's also a cultural change in how you think about the work that should be done by finance teams. And I think those are completely different value propositions.
I think that makes sense. And I think it's also worth saying that even if you start with better controlled travel, you will probably also save money on fares. It will just happen as a byproduct, right? Because when policy is enforced before booking, fewer out of policy bookings mean lower average fares anyway. So it's not like you have to choose between the two. You just have to be really clear about which one matters the most and which one you're optimizing for. And I agree with you that the biggest returns that you're likely to see are from that structural change, which is bigger and much more impactful. We're running out of time, so let's do one last question. If a CFO is evaluating travel tools right now, what's the one question you think they should ask in a demo to expose whether the tool they're evaluating will work for them, whether it's built for finance or for the traveler.
Show me what month-end close looks like with the tool you're presenting. Show me what month-end close looks like. That's the question, because finance lives at month-end, and every travel tool's true colors come out when you ask that. If the tool was built for the traveler, the answer is going to be vague, and they might direct you towards showing their beautiful travel booking experience. It's going to look like booking.com. When you can export reports, you can integrate with your accounting system, there it will be a lot of hand waving about dashboards. If the tool was built for finance, the answer is very concrete. Here's a trip overview. Every trip is reconciled. The invoices are attached. The expenses are grouped. The data has synced into your ERP, and the close happens automatically. You're just reviewing it. So the single question separates the two categories of tool faster than any other question I know.
Yeah, I really love this. Show me what month-end looks like. It's a great trap question. Because like you said, every tool will tell you about the beautiful booking experience. That's what they're good at. But almost no tool has rehearsed the close demo, and that asymmetry that you're kind of focusing on. Yeah, I think is very telling. Okay, I think we're going to wrap here. The case that we're making, I think, is pretty simple in the end. Travel has been treated as a traveler's problem, the travel manager's problem, the HR team's problem. And we think that should change because finance keeps inheriting the mess at the end of the month. And Payhawk Travel is our idea of what it should look like when you put finance first. Next time, we're going to dive a bit deeper into the AI side of this because every travel tool now claims to be AI powered. So we're going to be really honest and transparent about what AI means for Payhawk and how we're using it. And what is actually real and what is hype. So thank you so much for your time, Bobby. It was a pleasure, and we will see you next time.